Every single morning, it's the same story, right? We're hit with this tidal wave of financial news. You've got conflicting headlines, confusing data points, and so-called experts telling us completely different things. It's pure chaos. But what if you could cut through all that noise? Well, today, we're going to give you a simple, powerful framework to do just that.
So you wake up, you check the news, and boom, you see this. A respected analyst is warning that the massive spending on AI could be a bubble, kind of like the dot-com bust. They're even recommending hedging with European and Japanese stocks. Okay, so that's a little concerning.
But then, just a moment later, you see this one. Micron posts this super surprise in its earnings, saying their high-bandwidth memory is sold out through 2026. This is seen as proof that the AI investment is leading to real profits, and the whole semiconductor sector just soars.
And just to make things more confusing, you get this headline about the economy. The latest jobs report shows a surprise drop in private employment, which actually gets the market excited. It pushes the odds of a Fed rate cut way up. So, bad news is good news, right?
And just when you think you've got a handle on it, wham, you see this. A couple of Fed presidents come out with these really strong statements, warning that inflation is still a risk and that the market's hopes for a rate cut are way overblown. And just like that, the optimism evaporates.
So you're left with this total whiplash. Is AI a bubble or is it a boom? Is the Fed cutting rates or not? It feels impossible to make a decision. So the real question is, how do you cut through all of that noise to find the real story that's driving the market? That is exactly what we're going to break down for you.
We're going to introduce a simple but honestly incredibly effective framework for finding the signal in all that noise. It's really about structuring your thinking so you can understand the market's daily story. So here's how we're going to do it. First, we'll learn how to decode the day's main plot. Then we'll go hunting for the evidence to back it up. After that, we'll turn all that analysis into a concrete plan of action. And finally, I'll leave you with a daily blueprint you can use every single morning.
You know, at its core, the framework is just these 3 simple steps. First up, the narrative. What's the main story everyone is talking about? Second, the evidence. What data and what numbers actually support that story? And third, the strategy. So, based on the evidence, what are the smart, logical actions you can take?
Okay, let's dive right into this first step, figuring out not just what the market did, but more importantly, why it did it. This is all about finding the day's main plot. See, every single day, the market is driven by a dominant story. We call it the market narrative. This could be anything: fear about inflation, excitement about some new tech, or a big shift in central bank policy. Our first job is just to identify what that narrative is.
We always start with the what by looking at the headline numbers. So on this day, we see the S&P 500 is up 0.25%, the Nasdaq's up over 0.5%, and the Dow is basically flat. The Nasdaq is the clear leader here, and that's our very first clue.
And here's the why. The dominant story of the day was all about Amazon. The company reported that its AWS cloud division grew 20%, which is its fastest rate in 3 years. Now, this was seen as hard proof that all the money being spent on AI infrastructure was finally turning into actual real profits. That one story completely overshadowed everything else.
All right, so now that we have our main narrative, the next step is to act like a detective. We need to go out and find the hard data that actually confirms our theory.
So if the story was all about Amazon's big AI success, you'd expect the consumer discretionary sector, which is where Amazon lives, to be the leader. And that's exactly what we see, up over 4%. But look closer. The broader information technology sector was actually down. This is a huge piece of evidence. It tells us the rally was extremely narrow, driven almost entirely by that one company's story.
So, the crucial point is to connect all the dots. We confirm the Amazon narrative, we see the Fed's hawkish tone, which helps explain why the rally wasn't broader, and we see the drop in companies like Meta and Microsoft, which shows that investors are still pretty worried about the huge cost of AI capital expenditure, or CapEx. All these little pieces fit together to paint a really complete picture.
Next up, we look at sentiment. The Fear and Greed Index gives us a great snapshot of the market's mood. And what do we see? It's sitting firmly in greed. This tells us that despite some of the risks, big institutional investors are still positioned aggressively, especially for a year-end rally in those big AI names.
And we can double-check this with the VIX, which you probably know as the Fear Index. On this day, it fell to 14.28, a 4-month low. A low VIX suggests that the market isn't really expecting any major turbulence in the near term.
It's just another piece of evidence pointing to a pretty stable, risk-on environment.
Okay, so we found the narrative and we've backed it up with some solid evidence. Now for the most important part, turning that analysis into a concrete plan of action. I mean, what do we actually do with this information?
Looking at the day's biggest individual movers can give us some huge clues. You've got a clear winner in Amazon, a loser in the AI infrastructure space with CoreWeave, and a potential warning sign about the broader consumer from Nike. This tells us the AI story isn't so simple, and there are definitely other economic forces at play here.
So, based on everything we've seen, two pretty clear strategic paths emerge. The aggressive path is to bet that the AI narrative, proven by companies like Amazon, is just going to keep driving the market higher. The conservative path is to acknowledge the risks, like the market narrowness and the bubble warnings, and to hedge by diversifying into other areas. And here's how that translates into specific actions. You know, an aggressive investor might buy tech ETFs like XLK or semiconductor ETFs like SOX, but they're risking a sudden AI bubble collapse. On the other hand, a more conservative investor might opt for healthcare with XLV, or maybe an equal-weight S&P 500 ETF like RSP to avoid being too concentrated. But their risk is missing out on some huge gains if that AI rally just keeps on running.
So let's put this all together. We've gone from what felt like a chaotic mess of headlines to a clear, actionable plan. Let's do a quick recap of this powerful framework so you can use it as your own daily blueprint.
Just remember the blueprint. Step 1, find the narrative. Step 2, find the evidence. And step 3, form a strategy. That's it. This simple process is your key to cutting through the noise every single day.
By applying this kind of structured approach, you're no longer just reacting to the chaos. You're actually actively decoding it. This framework gave us a really deep understanding of today's market story. So the only question left is, what story are you going to uncover tomorrow?